What is up, guys? Welcome to the Start Today podcast. I am your host, Chris Cavallini, and today we have an episode that will, without question, change the lives of many. Listen, I know a lot of you guys listen to this podcast, follow my stuff. I know a lot of you guys are on the hunt for that next level, and part of reaching that next level is getting paid and making some money. And that's what we're going to talk about today, guys. We're not just going to talk about making money. We're going to talk about something that is arguably, or not arguably, without question, the hottest topic trending right now in all of media, social media, everywhere you look, people are talking about it. And that's cryptocurrency. Okay, I have with me today my best friend, my brother, an individual who wears a lot of hats. All right, he's really good at a lot of things, but one of the things that I would go as far as calling him an expert. He has changed my life in many ways, but he's taught me a lot about cryptocurrency, taught me how to invest my money, basically helped change my psychology towards it, because I took a bad beat with my first crypto investment, which we'll talk about back in 2018. But guys, look, if you don't want to make money, if you're somebody who's good, right? You don't want to go to the next level. You don't want to win and get paid and have the means of living life on your terms and doing whatever the you want, helping who you want. Probably best that you turn the episode off and just kind of go about doing whatever you're going to do. However, if you are somebody who's looking to make some money and get a better understanding of what cryptocurrency is and how you can make a lot of money off of it, I suggest you grab a piece of paper, grab a pen, and take notes, because today I have the man, the myth, the financial advising guru, and dude, life changer, because you've changed my life.
Thank you.
My brother, Dr. Saman Soleymani. Saman, what up?
Thank you so much, my man. How are you today?
It's good to have you back on the podcast.
I'm so glad to be back here in Tampa.
Yeah, guys. So some of you may, depending how long you've been listening, may have heard the episode that we had John, which was fun. For those of our listeners who haven't, can you give a brief bio? Because look, man, they're not so much concerned about that. They want to hear what we just hyped up. They want to know how they can make some money. But tell them a little bit about yourself, and yeah.
Sure. Dr. Soleymani. I'm been in Jacksonville for a long time. I'm a physician, entrepreneur, philanthropist, own multiple medical centers. As you mentioned, wear multiple hats, have always been in investment.
Grinder.
A grinder. Yeah. And I try to become the student. And as you know, anything that I get into, I don't try to just skim the surface. I do a deep dive and try to really become the subject matter expert in the
that's
process.
Putting it very humbly. Anything that from my perspective, anything that you touch, anything that you're involved with, anything that you put your name to, I have found that you literally feel it necessary to educate yourself in every facet and every area, and do exactly that. Become a subject matter expert. And I tell people this all the time when I'm talking about you. I have a lot of successful friends, but I don't know that I have anybody who is as well-rounded as you. I mean, we're talking about firearms, right? Exotic cars, rare diamonds, rare diamond connoisseur. This guy, he actually, I wouldn't go as far as saying a culinary god, but a demigod perhaps in the eyes of some. But man, guys, this is a guy who's not only like a brother, a best friend, but a mentor. And I honestly mean that.
Thank you so much.
No, thank you. I mean, he has helped me in so many ways, with my business, through personal issues. None of that really is relevant to what we're going to talk about today. But what is relevant is the fact that you got me in the crypto game, and you helped me reform and reshape my psychology when I had a very bad, association with it based off the initial investment I made in 2018. And dude, had I listened to you, had you finally been able to flip that switch a few months sooner than you did, we've talked about this. It would have, 5x what it is. But I've been able.
I'm glad you came on board.
Me too, man. And look, I feel I'm still early to the game. We all are, but I made a lot of money thanks to you, and I have objective firsthand knowledge that a lot of our friends, mutual friends, have done the same because you have helped people understand this shit. And look, for those of us who don't fully understand or comprehend at the level that you do, you have expressed how certain and passionate you are about this in such a way where it made us all comfortable making those investments, maybe when we didn't understand it as full on as you did. And between all of us, we've made a lot of money, and that's thanks to you, man.
I'm so glad. I'm so glad. I told you the other week, I'm like, I'm so glad you're on board and you came on board.
Let's give our listeners some context.
Absolutely.
Okay. So in the beginning of the year, in January, I had some monies that I wanted to invest. I had some cash, under my mattress or whatever the case is. And I wanted to invest it. And I reached out to Saman. I said, hey, look, I have X amount of monies and I want to invest it. Where should I invest it? Can you share with the listeners what your answer was?
I said I would invest it in Bitcoin and Ethereum.
That's actually not what you said. You said, motherfucker, listen, this is what you're going to do. You're going to invest all that money in Bitcoin and Ethereum. And then you told me what you did.
Exactly.
And is that too personal, or can we share?
No, I mean, it goes without saying that, we have to do a little background that, I've been in cryptocurrency for a long time, for now almost
Just tell them
4
what you
years.
did and then get into that.
I essentially in December liquidated my entire stock portfolio.
We're talking multiple seven figures here, guys.
This was
Liquidated. And for those of you who don't know what that means.
Is sold everything to the penny.
And did what with it?
And converted into Bitcoin and Ethereum.
Went all in on crypto.
I had my stockbroker call me and it was funny because he's like, what the hell just happened? I see your account went to zero in 5 minutes. Because once
good for him for being on top of that.
Once I make my decision, so one thing with people that I discuss with in life coaching and whatever is that if you have enough conviction in anything that you do, and once you've made that decision for whatever those reasons are, and you have weighed all the options and you've decided that this is the way to go, there is no reason to have both foot. Because anytime when someone tries to say, for example, it's very common for someone, let's say in that position, to say, yes, I think, let's say Bitcoin is an amazing idea, but I'm going to do 20%. I'm going to do 50%.
You're either all in or you're not.
If someone says that, the way my personality is, the way I take that is that you're really not sure of your decision.
Right.
Because if you've done your homework, either this is not a good idea, and if that's the case, you should invest a penny in it. And if it's such a fantastic idea, why would you leave money on the table and putting in something that may give you 8% in a year? So needless to say, the conviction that I've had over the last few years, and I believe that it was the right time, I liquidated a significant amount of money and converted. And my stockbroker, the first thing was like, please don't tell me you bought another exotic car. And I'm like, it's worse in his eyes,
right?
Because he's all about
traditional stock
and
investors.
I said, when I said, you're gonna hate me even worse, it's not a car. You can't touch it. You can't drive it.
Yeah.
It's code. And so I told him, and he obviously thought that I had lost my mind. And
so did I, honestly.
And we talk frequently with my friend, and you know him, and he's like, Doc, you were right.
Well, he's my financial guy as well. But he wasn't the only one who thought you lost your mind, because when you first of all, when you were trying to get me to do this, and told me that you had done it, I had anxiety for you.
Yes.
I mean, you were all in. You literally, and anybody who has done any amount of financial literacy research, especially as it comes to investing, the one thing they tell you is you want to diversify. That's like the most important thing. But the game has changed, has it not?
It definitely has changed. I personally believe, and when I say let me start by saying that I didn't wake up one day and had this fruition come from the angels from the heavens that told me to do this. I follow other smart people and very large institutions that to me have the resources and have the wherewithal and have the knowledge. So for example, when you look at Morgan Stanley, when you look at Goldman Sachs, when you look at Harvard, Yale, and Brown University took their entire endowment. And for people that do not know what that means, universities have endowment.
I thought endowment meant how long your penis was. I'm not even trying to be funny right now. Is that not?
No.
And really?
No.
Is that? All right.
No.
Well, we can cut that part out.
Large universities like that have endowment. Their budgets that they need to run that school is in the billions. And so they have to take their money and invest it somewhere and try to make some money off of their tuitions or whatever it may be so they can keep running.
College is a business.
College is a business. So you would think that Brown, Yale, and Harvard, would you agree, probably some of the smartest people maybe on the planet are there.
Without question.
Right? Those three decided that they're not going to go buy Apple stock or Microsoft stock. They're going to go put their entire endowment in Bitcoin. Not even the other 7,500 digital currencies there, in Bitcoin. So Fidelity is the second largest asset manager in the United States. And what I mean by that is they handle $3.5 trillion. Not million, not billion, trillion. BlackRock, who's the largest asset manager in the world, manages $7.8 trillion. They have gotten into crypto in Bitcoin. When you're talking to PayPal, Square, Cash App, Visa and MasterCard have already come out and said they're supporting Bitcoin, and they're coming out with all the programs where you can buy, sell, do transactions, large or small, with Bitcoin. The list is endless of, this is not just your shoe shiner telling you, hey, you should get into this, you'll make some money. That's what I said. This is not, who am I at the end of the day, as smart as I think I may be, who am I to argue with Fidelity, BlackRock, Goldman Sachs, Morgan Stanley, Visa, MasterCard, and PayPal? So those guys are ahead of the game. And when a company like Fidelity, where their entire income and revenue comes off of stock, says suddenly we're going to have a Bitcoin trading desk for not any run-of-the-mill, for our ultra-high net worth clients. Why? Because their ultra-high net worth clients are coming out saying, I want Bitcoin.
Right.
And those ultra net worth clients have a lot of financial advisors and are very smart people themselves, which is why they're in that position. This is not your mega lottery winners that are doing this.
True. And on that note, I think there's also something to be said and might not be abundantly clear regarding Fidelity exclusively making it available for their high net worth clients.
Yes.
Those who are in the know, those who are educated, those who have done the work and the research on cryptocurrency. The same can't be said about their lower net worth clients who largely depend on their financial advisor at Fidelity to tell them what to do. I think that's a really important thing to point out there, because the fact is this: there's a lot of money to be made in cryptocurrency right now, and we're all still early.
This is the early phase. This is no different than, people, depending on how old you are when you're listening to this. I mean, not long ago, I was in medical school and there was no internet. And listen, we're talking, I graduated medical school in 2000. We're not talking about like 1960s. This is in this century.
Right.
Like, you had dial-up.
Yeah.
I remember when they were talking about, Mark Cuban was talking about this a few months ago, and, because he used to own Broadcom, the company. And he said, when we started Broadcom, our proposition was that you're going to get this equipment called a modem. You're going to tie up your home phone line. You're going to go through that, connect that 2400 baud modem, and then you're going to download all these softwares, and then you're going to listen to radio on the internet. And it's like, people at the time were like, are you stupid? You can just dial your station and listen to the radio. Why would I want to buy all this equipment to listen to radio on the internet when I can just dial the radio? And now guess what? Spotify, everything is streaming.
Yep.
So it's hard for people to understand what is around the corner. This is Internet 2.0. This is how what they call the Internet of Value. This is where you literally can send money with an email. And as idiotic or simple or as nonsense it may sound, that is where we're heading. You know, like I said, when the head of the U.S. Treasury comes out and essentially gives a national press conference 2 days ago and says U.S. is doing everything they can to support digital currencies, and we're going to make stable coins to make things easier for transfer of money, you understand that they're not going to give you all of it at first. They have to ease it in.
Of course.
You know, you're going to hear about that. Then, you know, a year later, you're going to hear a little bit of expansion, and it's going to go on. So we are at such an early phase, and having been there and many people learn about this when things are getting really frothy, when it's on the tip of everyone's tongue.
Mm-hmm.
And the famous saying that's always said is that you make money in a bull markets make you money, bear markets make you wealthy.
Yes.
So it's...
Let me jump in there.
Yeah.
Okay. Because pulling out of this whole like conversation of crypto, I think that people in general think that the way that they're going to get rich, or the only way to get rich, is by owning a business, by hitting the lottery. And the fact is, what they don't realize is the super rich, the mega wealthy, they did not get rich or did not get wealthy by the income they made through their business.
Oh no.
And that's a very important thing that people need to realize. And that's why, you know, I've been talking a lot more about financial literacy and helping people just understand how money really works, because it's not the same as what we've been conditioned to believe growing up. And the fact is, it doesn't matter how much you make. Like, if you invest and you invest responsibly, you have the ability and opportunity to be independently wealthy. You have the opportunity to be financially free. The problem is, people don't have a strong psychology with money, and they think that it's all predicated upon how much they make. What do you say to that? What do you say to somebody right now who's making, let's say, $40,000 a year and thinks that, well, I just don't have the money to invest, and you know, that must be nice for them, but you know, I'm not making six figures, seven figures.
Yeah, it's so false. And here's the simple fact is that, and these are things that it seems astronomical, it seems impossible, but it's fact.
Mm-hmm.
If you had bought $1,000 worth of Bitcoin in 2010, and I think that person that makes 40,000, that person that makes 20,000, that person that is on minimum wage, I know wasted $1,000 on some dumb shit.
Facts.
Right? If you had bought $1,000 worth of Bitcoin in 2010, it would be worth, I think, $60 million today. $1,000 worth.
Mm-hmm.
Now, did anyone buy $1,000 worth then and keep it till now? Probably no.
Probably not.
Why? Because of the greed factor, because of lack of fortitude and knowing foresight that's coming. And I'm a prime example of that.
Sure.
I've told you the story. In 2017, I bought, I think, 100 Bitcoins at $1,100, right? So it was
11 total or a piece?
$1,100 a piece.
Got it.
Right. This is what we call the last cycle.
Right.
So mind you, it's already gone up from a penny to $1,000.
Yeah.
How many percent that is?
1,000x.
I'm not going
Yeah.
It's more than 1,000x.
Yeah. Oh, yeah.
It's like 100,000x.
Yeah.
So at 1,100, I'm like, oh, this is expensive.
Yeah.
Right? I mean, it's all reference.
Right.
If you would have told me at 1,100 that it's going to get to 65,000, I would have said,
unbelievable. It's not.
Like you could have told me there were Martians that have landed in my backyard, and that would have been more believable.
Sure.
So I bought 100 Bitcoins, I think, at $1,100, and 3-4 months later, it went to like $2,000 or $3,000. And I'm like, I tripled my money. Buy.
Yep. Winning.
Sold. Done. And the
Yep.
way you look at it, and my reference point has always been in the regular investing world, which is, anyone that invests in the stock market, fund managers, the best investors, if they beat the S&P, which
10,
typically gives 7, 8%,
yeah.
if they make 10%, like you are the king dingling,
crushing.
like you are killing it.
Yeah.
If you make 10% a year. And for people that are into math or not into math, whatever money you have, if you make 10% interest every year, it takes 7.8 years to double that money. So if we take 10 grand and I earn 10% interest, and mind you, by many standards, that's great, because a lot of wealthy people that have $1 billion, they're like, hey, in 8 years, that billion becomes 2 billion.
Sure.
That works. But I don't like 8%, 9%, 10%. So when I'm like, in 4 months, I made 300%.
Yeah, it's time to get out.
It's time to get out. Yeah. I got the top. And what we call the false confirmation is when I sold, let's say, I think at 3,500 to 4,000, it went to like $1,800. And I'm like, see, I'm so good. I timed the market so well that I sold at the top.
What happened?
So I got out of my money. I think I wasted whatever money I had on some cars or whatever I did. And that thing went from 2,000 to 8 grand, from 8 grand to 4,000, 4,000 to like 11. It had this undulation with a final, and it had what we call a blow off top, and it went to like north of $20,000. So my 100 of Bitcoin that I sold, let's say at, I don't know, 3 grand, 3,500, ended up being 20 grand. So that could have been a significant different chunk of change that I didn't think that was even possible. Now, the most important caveat of that is, and what a lot of people will hang on to, is that digital currency has a lot of volatility.
What is that? Okay, so
it crashed 80%.
Yes. You gotta, so just for our audience, for people who aren't in the game, explain to them what volatility is and do your best to help them understand, because this is psychologically for people, if they invest in something like with me with XRP.
To go even more basic. So one question that comes up, and when you made a post and you tagged me, I must have got 30 different questions on my DM, like, please help me with Bitcoin and Ethereum. So the number one question that came across all those messages were, hey, this thing, how does this have any value? Right? Isn't it just a computer code? What if someone made another code? And listen, it's a very valid question. I asked this question myself 4 years ago, 5 years ago. And that is a kind of a 19th century mentality, because if anything that had any value, you could touch or grab. Like you had to make it. It was a good, you sold it, whether it was bread or a car or a hat. In this century, in the world of internet and digital technology, many things are valued by what we call their network effect. And so there are many, many examples of some of the largest, most valuable companies in the world that are valuable, not because they make a single product, but just because the fact that they have a huge network of usage. And so, for example, I've given you the example of Uber. Uber doesn't own a car, doesn't own a taxi, but the reason they're worth, let's say, billions of dollars is they have an app that you and I use. And the more people use that app, listen,
it's a household name.
We can spin up an app that does that same ride sharing, and we can call it Cavs ride sharing app, and it will be worthless, right? Because just 5 people will use it.
Sure.
Right? That's it. Now, guess what? If suddenly 1 million people used Cavs ride sharing app, guess what? That may be a $200 million company. Nobody can come and say, well, I can go make that app too. Sure, go ahead. And if you can get 20 million people to use it, what people need to understand is that there is literally $1 trillion worth of US dollar equivalent locked up into Bitcoin. Not 1 million, 10 million, 100 billion, nearly $1 trillion as of a couple of weeks ago that was tied up. That is not, and anything Once it crosses the $1 trillion mark, you are now a real asset class. You are in the same class as real estate. You're in the same class as gold, derivatives, very large assets. Why do you think now the Goldman Sachs, the Visas, the MasterCards, the Fidelities, and the BlackRocks now want to now jump in? Because they weren't interested when it was a $200 billion asset, because for them, there's not enough juice essentially in it. Now, when it's a $1 trillion asset, when it becomes a $5 trillion, there are legit analysts that have come out and said that in the next 5 to 10 years, Bitcoin will be a $100 trillion asset. And it's $1 trillion today. Now, the nonsense you may see, there's plenty of YouTubers or whatever, Bitcoin will be $1 million this year? Hell no.
Oh, there's also YouTube videos that say it's going to zero.
It's going to zero. Well, it's very interesting that said that. There is a direct correlation that someone had made a graph that the more negative news there is about Bitcoin, that was the best time to buy Bitcoin,
Sure.
right?
Agreed.
So it showed basically there was like a week period, let's say, where every article was Bitcoin, and mind you, this is over this 10-year period, right? Bitcoin is dead. Bitcoin's going to zero. It's over for Bitcoin. And it was like number of negative articles per week. And if the week that had the most negative articles, if you had bought Bitcoin then, in the next 12 months, you would have 10 extra money. So there was an article that like Bitcoin has already had over 100 funerals because so many people have killed Bitcoin, announced Bitcoin. And guess what? It's been going on for now almost 11 or 12 years. There are stocks that are not around that long. So, and that's the other thing is the longevity. The biggest thing that is very important where people talk about why does the price go up is the network effect and the scarcity. The reason, and since I'm a car guy, the reason, a McLaren F1 is $20 million because they made so few of them. So which means there's less to go around. So for the people that can get it, it's going to cost more to get it. Now, Toyota pumps out 10,000 cars a day. And guess what? There's not a Toyota minus some classic that's ever going up in price. They just depreciate. The most expensive is the day you buy it, and it's a straight downhill after that, right? There's no Toyota that's 20 years later is worth more than it was day one, except a McLaren F1 was $1 million car, and now it's a $20 million car. So it's gone up 20 times its value since inception because it's scarce. What is it about Bitcoin? Bitcoin, it is essentially the most perfect blockchain. Why? Because it is deflationary. It is not inflationary. And what does inflation mean? Well, when our government prints $4 trillion in 6 months, what that means is that it's not backed by anything, right? We just literally printed IOUs. The same way people say, well, how do you know this has value? Well, the same reason you think that $100 bill is worth $100. It costs more money to make a quarter than a $100 bill. But because you accept that it's $100 and I accept it's $100, we exchange goods is worth what we think it's $100. So when you print suddenly, so think about it, in the entire history of the United States, there's been 12, 13 trillion dollars that have ever been printed, and we've printed 4 trillion in 1 year. So like 40% of the entire supply of US money that has ever been printed, we printed in a year. And people wonder why the price of lumber has gone up 10 times. Why has gas gone up? Why is food, vegetable? I know listen, I'm a salad guy.
Gas,
everything has gone up. So when people think, well, I have this money in the bank, you don't. Your money lost 30% of its value. So if you had, whether you had $100, that $100 worth $80. If you had $100,000, that $100,000 worth 80 grand. Because that means for you to transact, people are like, oh my God, my house price has gone up in Florida. My house is up 25%. Your house is not up 25%. No. Your dollar is worth 25% less.
Yeah. So with all of that said, I think it's really important. It took me a lot of years to realize this. But the fact is, if you are saving money
Yes.
and keeping money in the bank, you are in fact doing what?
You're making a huge mistake.
You're losing money.
You're losing money on a daily basis. Now listen.
But that's not how people, but again, that's not how, as a society, we were conditioned to believe. We're conditioned to believe that
Put money in the bank.
You keep it in the bank. No, the fact is this, guys. If you're seeing people out there that you know are crushing it and making a lot of money and just killing the game across the board, you probably at some point just speculate to yourself how much that person has in their bank account. I'll tell you how much I have in my bank account right now. Right now, I have less than $40,000. Less than $40,000 in my personal.
Dead money.
It's dead money. And even that is too much.
It's losing money.
But I want to have that to deploy. And look, here's the interesting part. Right now, okay, it's May 2021. Over the last couple of weeks, Bitcoin has crashed. I have bought
more,
a couple $100,000 more. I know you have bought substantially more than that. How much do you recall the top price you purchased it at? I think mine was like 55. I bought it at.
So I bought some more again I bought at 54.
Yeah.
I bought at 45.
Right.
And this week I bought a whole bunch at 32, 33.
Right. So the point is,
and the way I looked at it is, and the crazy part is, and the way I look at it is new money or novice versus experienced.
Mm-hmm.
As Bitcoin was going down, I was cheering it.
Yes.
Right? Not because, oh my God, I'm losing money. I'm like, that's like your favorite Louis Vuitton bag that's $2,000 that's suddenly on sale for $700. You sure as heck were willing to pay $2,000 for it, but it's $700 now. What I tell everyone is, just like any investment, do not put any money in. Do not put your rent money. Don't put your college money. Don't put money that you need for the next 2 years, okay? So it's a set it and forget it. Always have a little bit of dry powder left on the side that when to take advantage, not to sell into market volatility. Data shows, Cav, over and over again, that the point of maximum fear, the point where you're about to just log on and sell everything, is the time to buy.
What's the quote? What's the quote? The Rothschild's quote.
You buy when there's blood on the street, even if that blood is your own.
That's the best time to buy.
That's the best time to buy. Because, and I'll give you a simple example, in both aspects, just so the audience understands that this concept works in not just digital currency. And you took advantage of this, thank God. So last year, during the COVID crisis, when it was announced that it was a pandemic, we had a stock market crash, a giant. So mind you, for people that either know or don't know, essentially Warren Buffett is considered like the grand master wizard of investment, right? And whatever he says is considered like just like Jesus wrote. So, I mean, literally. And Warren Buffett was heavily invested into Delta Airlines. And when COVID happened, and obviously airlines shut down, Warren Buffett sold millions of shares of his Delta Airlines. Mm-hmm. And and because he's a publicly figure, he has to disclose it. He came out and said, I no longer own any airline. I liquidated my entire airline portfolio. Yep. So Delta, who was trading at $65 a share, crashed to $18. So mind you, Warren Buffett, who is the guru, like Warren Buffett is running that way. Mm-hmm. A normal person with 2 cents would be like,
follow his ass.
Warren Buffett is right. I followed when there was, now mind you, I didn't own the airlines. Yeah. But I'm like, it can't get any worse. No. People were willing to pay for Delta at $65 yesterday. It's $18 today. That means it's on a 75% sale.
Yes.
And yes, it's going to suck for about 9 months because there's going to be COVID. Mm-hmm. But guess what? Are people going to stop flying? Heck no. Right. What did I do?
Pushed in the chips.
All in.
Yeah.
All in on Delta.
Yes.
Delta ended up at $50.
Delta and
By the
Expedia
time-
we did well on.
By the time that I got out of it,
And Royal Caribbean.
3X and Royal
Yeah.
Caribbean.
All the businesses that were literally not crippled, that were taken out of the game.
Gone.
You pushed in on, and you, again, bestowed that knowledge and that wisdom on your friends, myself included. And yeah, we did well on Delta, Expedia, Royal Caribbean that, I mean, tagged. We put in the cash and I mean, I know
4X, 5X.
4 or 5X.
Your Expedia, you killed Expedia.
Yeah. So look, so I want to read this text that you sent me the other day. Okay. And this text, again, I think this is context important, coming from a guy who, as we spoke about earlier, who's pretty much all in. Okay. You pushed all in January, but obviously you've made a few bucks since. But what you continue to do is take all those chips and continue to port into crypto. So you just said that you bought as high as 55, 54 on Tuesday. You said, strap your seatbelts. If we go below 39K, we're going to 32K.
Oh my
This
God.
is where it gets fun. Laugh out loud. And I'm selling apples over here. So I think it's really important for people to understand that you and I, who are both heavily vested in these
Space,
cryptocurrencies
yeah.
in the space, multiple, predominantly Bitcoin and Ethereum. I have significant investment in XRP still.
yes.
We'll touch on that story in a bit. But because the news is saying that it's going to because it's dropping at a alarming rate, because it is indeed crashing, that doesn't mean that we're getting nervous, that we're apprehensive, that we're having second thoughts. No, what we're doing is the opposite. We're pushing in more. We're trying to take advantage of this sale, of this buying opportunity, because we objectively know it doesn't matter what it says now.
It has nothing to do with the day-to-day, month-to-month. Here's the simple fact. There is not a single investment tool. You cannot name a stock, not a company, not an entity, not a derivative that has returned an average, a minimum 200% return a year for 10 years in a row. Like that sounds like a fantasy, except it's true. So we don't care about the upper up and the higher high. And I give the same example. In December of 2017, January 2018, Bitcoin at that cycle topped out at $20,000. If you happen to be the unlucky person that happened to buy at the absolute peak before it took a dive down, and you had the wherewithal to not panic and sell, just 3 years later, you would have been at 65,000. Correct? So I can make that ratio way more attractive if we talk about from the bottom of where it crashed to, which I'll touch.
Yeah.
I'm talking about if you bought it at the most expensive, the day that it was at the top and it was a cliff dive straight to the bottom after for the next 9 months, you still would have 300%ed your money, which even as we talked about, at 9% a year, 10% a year return, it would take 7.8 years to double your money. Yeah. And in 3 years, you would have 3x your money. The problem is most people, I know some people that held, most people did not hold that because people panic. People listen to the news. The problem
is psychology.
And psychology is very important. And as they say, and it's just like stocks. You haven't lost money until you sell because no one is taking your Bitcoin away.
Right.
No one is taking, if you had 10 Bitcoins, you had 1 Bitcoin, you had a tenth of a Bitcoin, whether it's $1 million or whether it's $5, you still have that tenth of a Bitcoin.
Yes.
That is not taken away from you. It's your perceived value. So as long as you have the conviction to know that this is, people are like, oh, is this a Ponzi scheme? Like, I don't know a Ponzi scheme that's been going on for 11 years where now every large multi-trillion, billion-dollar institution has invested money in.
I just got to come on and say this because it's like been brewing in my mind, and I was debating whether or not I should say it, if it will come across as mean and judgmental. But the fact is, the whales, the big dogs, people like you and I, like we hope that people are going to be weak and tap out and fucking sell when the shit is crashing, because what that means is it's going to go down even lower, and we're going to buy in even more at a lower amount, which means inevitably in a short period of time when it corrects itself, which historically it has always done by rates that have just never been before seen.
So Michael,
we're going to make more money off of that mentality.
So, and mind you, this is not about just, this has happened in the history of financial history. JP Morgan, which is why is JP Morgan the largest bank in the world and United States right now, is the crash that happened in the 1900s in the US, the worst crash of, US history that is still talked about. It was transfer of wealth from weak hand to a strong hand, because what he did is he went and basically spread rumors that all these other banks are insolvent, and if everyone took their deposits out, they didn't have enough money in their accounts to pay everybody. So in a matter of a week, there were lines outside of every bank in Manhattan, people asking for their money, and guess what? We're in a fractional reserve system, and people ran out of money to pay all the people. Because right now, if every single depositor at Chase or Bank of America went and said, give me my deposits, the banks don't have enough money to pay everybody. Because it's kind of an IOU system.
They don't have to pay everybody.
They don't.
Brother, if 20% of the people who showed up, who have money in banks, if literally 20% of people who have money in banks showed up at the same time to get their money out of the bank,
bankrupt.
They'd be
bankrupt.
Yeah.
That's the reason why decentralized, obviously, cryptocurrency came in. But what happened was he caused these banks to crash, and he went and bought all the banks at pennies on the dollar. And that was a transfer of wealth from weak hand to strong hands.
It's important that people understand how this works.
And to this day, there is manipulation that happens. There is, when you hear the term FUD, is fear, uncertainty, that is spread. There are institutions that wanted to get in at data just came out 3 days ago after this 40-50% correction that over 10,000 Bitcoins were purchased by, now pull out your calculators and count 10,000 Bitcoins times 40,000 and see what that number is. Were purchased by institutions because they were ready to buy at 65,000. Like, oh, hell, it's on sale? Of course. That's like your favorite car that you were about to pull the trigger on. Suddenly it's 50% off. You'll buy two.
And you were going to buy it anyway.
You'll buy two. So what's happened is that, yes, the what we call the retail investor. This is the teacher that took their $500 and bought Bitcoin at 65,000 and it went to 60 and they panicked and they sold. That's your retail. That is for the, if you are, and what I say.
But let me real quick, but investing $500 does not make you one of these people. Investing any amount of money and then pulling out when it starts to head south temporarily makes you one of those type of people. It's a completely different thing. It doesn't matter if you're investing $5 million or $5. The fact is,
the reason I mentioned that, and you're 100% correct, is that this, what we call the on-chain data, shows, it can show where these wallet holders were coins that they recently received, which means they recently purchased in smaller amounts. And that's the thing. When everyone starts talking about it, like when I'm at a restaurant and people are coming up to me like, hey, you should buy Dogecoin. When I have a 17-year-old kid saying, I bought $200 worth of Dogecoin and it's going to $1 million, and I'm like, oh,
that means stay the fuck away.
That means it's a problem. So when people come in with those unrealistic expectations, like people come to me, do you think Bitcoin is going to be $1 million this year? No, it's not going to be $1 million this year. In 5 years, I believe, in 5 to 7 years, I believe
potentially
Bitcoin will be $1 million. But guess what? There's going to be ups and downs along that road.
Just like life.
I mean, just like life. I mean, you've seen some of the things that I've called where I'm like, in this particular instance, I'm like, hey, listen, I think Ethereum is going to go to about $4,500 and it's probably going to correct about 30 to 40%. I was very conservative with that. Ended up correcting more. But we expected that. I'm like, get ready because when it goes to 4,500 and it corrects, because what happens is you're always dealing with people. Now, it's a combination. You have the person that bought Ethereum. Listen, it's not a secret. It's easy to know. When I just said I bought it in December, I bought Ethereum when it was $600, right? And there's someone that, and listen, there's a very famous saying: no one ever went broke taking profits, and it's okay taking profits. It's okay to take. You have a college to pay. You want to pay for your daughter's wedding or whatever it is, and you may want to sell 5 Ethereums to pay, and that's what it's there. Investment is not there for you to take it to the grave with you. You should enjoy it. You should take a vacation if you want to do that or whatever it may be. But what happens is that, so when it's a combination of either the very, very early investors that are so deep in the money that bought Ethereum. Do you understand? March of 2020, Ethereum was $90. Just get that in your head. It was $90 and it hit $44.50. That is a 50x return. That means if you put $1,000, you would have had 50 grand in 1 year. If you would have put $10,000, you would have had $500,000 in 1 year. And if you put 100 grand, you would have had, you figure out the math.
So on and so forth.
So the people that may have been very, very early investors, the price so people are like, why is there volatility? And volatility is the up and down of any asset, correct? And it's very simple. I sold Apple in December when it was $140, and this is Apple stock. This is considered a Dow blue chip stock, and it's still down. It crashed 30%, 20% after that. And it doesn't make Apple a bad stock. Things correct. They go up and down, except Apple's not going to do 100x in the next 5 years. No. It's just never going to happen.
Right.
You know? So with Bitcoin, the volatility, or Ethereum, the volatility is it's a combination of the people that were early investors that decide to take profits where it's this mental, and it's always very even numbers. We had it where, like at 2,000, it corrected to 1,400, like very big, large numbers. At 3,000, it had a little bit of a barrier. And at 4,500, people were like, ooh, it's getting, it doubled from, just think about it. It was just at $1,800. And in a matter of less than 2 weeks, it went to $4,400. That does not happen. And anyone that expected that money just gets thrown out the sky for free, and it was just going to keep going to, people are like, oh, it's going to $20,000 next month. I'm like, no, it's not going to $20,000 next month. We're going to have a pullback. We may have some we may for 2-3 months hover at this period. And we want that because the more it goes sideways, it's developing a solid foundation where now, like that consensus, the same way we say, hey, this bill is worth $100 or this quarter is worth a quarter. If Bitcoin stays in this, let's say 35 to 45,000 range for the next 3 months, I'll be happy because that means this is now creating the new floor. This is the lowest it's ever going to get. And that's not creating a structure for its next leg up. And the next leg up may be $70,000, $80,000. And guess what? Don't be surprised when it goes to 80,000 and it comes down to 50, 55. From 50, 55, it might go to 100 grand. The end result is, do not, I tell everybody, don't put in money that you're going to need next month, because that's when you end up on the wrong side of time. And listen,
this isn't gambling.
And I've said, this is not gambling. This is a calculated investment, and every investment has risk. You can sign up for, like I said, for Fidelity or Charles Schwab. The first thing they make you sign is that you may lose all your money. There's nothing guaranteed. If you want guaranteed, you can go buy treasury bills. That'll give you 0.9% in 10 years. 10 years. That's guaranteed money, which is essentially a loss because you lose about 10% of your money every year to inflation. Government will try to come tell you that there's no inflation, but you just got to look at your grocery bill to know there's inflation.
It's actually super
There's
simple.
inflation. There's quite a bit of inflation.
So let's talk more about the psychology side of things. And this is what really kind of helped me adjust my psychology, not so much towards investing, towards cryptocurrency investing. And just for clarity for our listeners, we're not saying that if you want to be wealthy and rich and make a ton of money that you need to invest in cryptocurrency. What we're saying is you shouldn't keep your money in the bank. You need to invest your money, whether it is something on the more conservative side because you don't quite have the stomach to deal with the volatility that is the cryptocurrency market. If you want to become financially free, it will never happen by your income. And it doesn't matter how much you make. It just truly doesn't. It'll happen by you having your money work for you. With that said, the psychology side of it is, I think, really comes into play because people typically associate with their financial status and financial situation with the amount of money they have in the bank. Okay. And that money, that amount, unless you spend it, it doesn't change. Now, the difference in cryptocurrency is your balance in your wallet radically changes day by day. And it's the same in the market as well, but it is profound in crypto. And that's the thing that people can't handle. They look at that number on that screen and they see that they've lost X, whatever X is. And in their mind associates that with, I can't afford to lose anymore. It's like, you are not losing anything until you quit.
100%.
That's it.
So Bitcoin, for example, say it has the longest history, has been around since 2009. I fully understand if someone had this thoughts in 2012, 2013, 2015.
There wasn't information or historical data.
It wasn't as long, like when it was a penny and it went to, think about it. If you got in at 2 cents and it went to $100, I would have been out. I would have been out way before $100. Because everything's referenced, right? So if you bought $10,000 at 2 cents, that means you would have had 5,000, 50,000 shares. And if it went to 100, you would have been out way before $100. Right. So it's the reference of mind that kind of changes. But now that it's been, right now it's irrational. Right now, I do not believe whatsoever that Bitcoin is going to zero, right? In 2013, you could have been said that.
That could have been a conversation.
Like, I had people call me today, hey, do you think Bitcoin could correct to 20,000? Absolutely, it could correct to 25,000. And if that happens, I will jump for joy.
Yes.
I will try to borrow against my house. I'm selling all of my cars so I can buy it at 20,000.
Right.
So can it happen? Is it likely? No, I don't think it's likely that it'll go to 20,000. Yeah. But if you said, hey, 2025, Bitcoin will be at 40,000? Heck no.
No.
I would sign my right arm that it won't be.
Right.
So as long as people extend their timeline, because, you're in, fitness, nutrition, people want to lose 90 pounds in 4 weeks because they got, their wedding to go to. Right. I mean, this is the reality. Everything is fast. Yeah. We're in a digital age. Yeah. Everything is speed.
Amazon.
Hey, now we do deliveries in 2 hours. Yeah. You're not going to become millionaires overnight. But what I'm saying is that if you have money sitting in the bank,
any amount of money,
and this is and one thing that I wanted to address, because we were talking off before it started, is I received a bunch of questions about, I missed the Bitcoin train because now Bitcoin is 30, 40, 50 irrelevant. It's too expensive.
I was saying that to you.
Yeah.
I was saying that to you in January.
It's $40,000 or $50,000. Should I buy a currency that's 10 cents because I can buy a lot more of it? No. Unless, listen, there are some amazing projects out there where, let's say, the currency price is less, but history has shown over and over again that the smaller the market cap of a company is, it definitely has a bigger potential to go up exponentially versus and here it is. Bitcoin is kind of like the big daddy now, right? Let's say, even though it's not there now, but let's say we consider it $1 trillion asset. It is much harder to make a $1 trillion asset into a $10 trillion asset than making a $1 billion asset a $10 billion asset. Even though both of those are 10x, the amount of money it takes to add an additional $9 trillion is on a different magnitude of making a $1 billion company a $10 billion company. So yes, can a smaller cap company, and most smaller cap companies, outperform Bitcoin if you use the perfect time frame, like from this to this, and you kind of finagle it.
Yeah.
But guess what? let's just go back to 2009 and start here to now. Bitcoin still outdoes everybody.
Either way, anybody who is new to the game, okay, they don't have the knowledge or understanding or done the research on some of these new, they don't need to be thinking about it. What you need to think about is if you want a sure
even if you can buy, if you can buy a tenth of Bitcoin, which is, let's say now $3,500, it doesn't matter that you don't have a whole Bitcoin. Imagine in your mind that Bitcoin, just imagine if your Bitcoin is now $3,500. Your tenth is one. The decimal point is irrelevant, because if Bitcoin becomes $100,000, that tenth of a Bitcoin is going to be triple what it is now. If it becomes $1 million, it's going to be 25x, 20x what it is now. So my biggest thing to listeners, do not get yourself hung up on that because I can't get one full solid Bitcoin. Like, you got a smaller slice of the pie, because as the price, it's just a percentage of the money that you put in that matters, not how many Bitcoin you own. Because guess what? There's going to be a time, and I would love to like bring this piece in 2025 and replay it, or 2020. I believe in the next 5 years, Bitcoin will be $500,000 to $1 million. So if you had a tenth of a Bitcoin now that cost you $3,500, and if it became $1 million Bitcoin, and now you have $100,000, wouldn't it be nice to turn $3,000 to $100,000? Or and that ratio would apply. If you have $10,000, if you have $100,000, if with $100,000 right now you could buy 3 Bitcoins, and it becomes $1 million piece, your $100,000 a $3 million investment in 5 to 10 years. There is really not much else. Not land, not derivatives. There's nothing else that is going to give you. Listen, the Winklevoss twins, right? These are the guys that got screwed over by Mark Zuckerberg out of their Facebook deal. They're the one that literally invented Facebook, and Mark Zuckerberg stole it from them.
They got paid.
They got very little.
Guess comparison,
what? They went in all in
on Bitcoin.
Yep. They got more money than Zuckerberg now. How karma works out. You know? That they got screwed out of that deal. Yeah, they got a few, in the rest, they got a couple of $100 million versus the billions that Facebook was worth. And they went all in.
Yeah, the universe looked out for them.
The universe looked out for them. So it is, do not look at it. We are incapable of thinking. Listen, in December, when I bought Ethereum at $600, in 2017, when I bought Bitcoin at $1,100, you would have told me that Bitcoin in 3-4 years. So think about it, 1,100 to 65,000. That's 60x.
Right.
I'm not even saying that Bitcoin is going to do 60x in the next 5 years, because 60x to $40,000 would be even more.
Yeah.
All I'm saying it's going to do, it's going to do 15x.
Yeah.
Because you're going to have, because when it went from a penny to $100, then from 100 to 1,000, those X's, your return on investment is going to get lower and lower percentage-wise as this gets bigger and bigger. But if it goes just 10x, if it goes from $40,000 to $400,000, when it was literally $1,100, if you would have told me, hey, in 2021, it's going to be 60, I would have been like, no. I would have given you my right arm and bet against that deal. And even in December, when I bought Ethereum at $600, if you would have told me that by May, it's going to be $4,000 plus, I would have been like, no way.
Yeah,
I would have been happy. I would have been happy to sign and say, I will buy this at $600, guarantee me $1,500 coin, and anything upside above $1,500, you could get to keep it. That's how sure I was that it's not going to go north of $1,500. And now it has corrected to $2,700. It went to $4,400. So during this week, when it got down into the mid 2000s or low 2000s, like, this is the greatest time to buy. It's half off. And that's the difference between if you have the conviction and fortitude and foresight to say, I'm not doing this because of next month or what's happening tomorrow, what Elon Musk is saying or what this YouTuber is saying. I'm doing this because I'm keeping this for 5 to 10 years. I'm only going to add to the stash. I'm going to ride while it's up. And if I see it giant, I always tell everybody, always have a little bit of dry powder aside. Whether it's $500, $5,000, or $500,000. And there always comes, there is 2 to 3 times a year in any cycle that you have a massive correction. I don't call it a crash. It's a correction because things are a little frothy. They got to come back down, and it shakes the weak hands out, as we say. You got transfer of money because, mind you, there is only 21 million Bitcoins. So think about how scarce it is. So as we talked about the McLaren F1, since I always refer to cars, scarcity is very important. Some of these other coins have 100 billion coins, 500 billion coins. If Bitcoin has 21 million coins, and to make it more important to understand is only 18 and a half roughly million coins have been minted to this day. The 21 millionth coin does not get minted until like 2150 for another 100 years. That's how scarce it is. And out of the current, let's say I'm going to round it up to the 19 million coins that we have, it's believed that almost 2 million of those coins have been lost forever, because part of it being very private is that if you lose your wallet address and your password,
Yep, you're done.
just like if you have a Swiss bank, if you have a Swiss bank account, they don't know by your name. You got to have that code to get in. And anyone that has that code can get in that Swiss bank account. If you don't have it, they're legit Swiss vaults that have stuff from the 1940s that no one has still claimed, that it may stay there forever, an eternity, because the people are dead. They didn't know. They forgot. It was stolen. It was fraudulent, whatever it was. And it's still in those vaults. They can't access them. They're there forever. So out of that 19 million coins, couple of millions are essentially considered lost, which makes that 21 million is really not even 21 million. So forever, it'll be like 19 million coins. There are more. So I saw data that in the world, out of the 7.8 billion population we have about 40 million millionaires. So keep that number in mind. There is not enough Bitcoin to go around for every millionaire to even have one Bitcoin. That's how scarce it is. So this is why I say, if you can own 1/10 of a Bitcoin, if you can own one Bitcoin, you're ahead of almost 40 million other millionaires in the world that don't have a Bitcoin. That's how important. And scarcity drives value.
Mm-hmm. So a few things to kind of sum up what you just said. On the psychology aspect, okay, people need to realize that if your bank account, right, when you see that balance go down, you know it ain't fucking coming back.
Yes.
Right? Okay, that does not apply to the crypto world. And you need to be able to distinguish between the two. Because if you can't, then you end up becoming one of the many weak hands who tap out, who quit, who get out early, only to end up regretting it. And again, you gave a phenomenal testimony. You pulled out and you were on the upside.
Yeah,
but you would just scratch the surface of what that upside.
Listen, just to give everybody an idea, the 100 Bitcoins that were sold for $3,000, let's say, or 3,500, which was, let's say, 350 grand, those 100 Bitcoins at today's price would have been worth $3.8 million. Mm-hmm. At the top, it would have been $6.5 million. And imagine, we'll talk about it one day when we say, hey, Bitcoin is $1 million now. What would those 100 Bitcoins would have been worth if I would have kept them? Mm-hmm. This same example applies to one of my very, very good friends who in 2002 bought 3,000 shares of Apple for $22. I'm not joking. It's a real story. He bought 3,000 shares of Apple for $22. This is when Apple was a dump. There was no iPhone. Their computer sucked. It was like Apple was a dead company. He held that stock for 3 years, and all it did was bounce between $22, $23, and it would just go to 23, go to 21. And when he's like, screw this is the worst company I've ever invested in. And so he sold. The year later, Apple announced their new little Apple computers. Then in 2006, 6, they announced the iPhone. Yep. We calculate, and mind you, Apple since then has split multiple times,
course.
3 for 1,
Yep.
4 for 1. We calculated his 3,000 shares, and mind you, when he sold it he sold 3,000 shares at $20, so like 60 grand. And he put that towards a down payment of a condo. He didn't even pay for even the condo. It was a down payment for the condo. We calculated that his 3,000 shares split adjusted as of 2 years ago would have been like $11 million. And that is not, and Apple has not done a cryptocurrency level type return in its entire lifetime. That's how much he missed out by getting out early. And it's a reality. I make fun of him all the time. Like I bring him like, hey, Apple, I just got the new iPhone 12. You know, so it's one of those things that people always tap out early.
Yeah.
And that's what it comes down to. So once you've kind of made up your mind and you have the conviction and you've done your due diligence and you look and you say, hey, I think this is where it's going. And again, I look at, hey, Harvard, Yale, Brown, PayPal, Fidelity, Tesla, MicroStrategy, BlackRock, some of the biggest institutions of the world are all in. Like, who am I to go against the grain?
Yeah.
Like, so that psychology, you have to pull the plug.
And hey, look, if you don't have it, that's fucking okay. If you don't have that mindset, if you don't have that discipline, if you don't have that confidence and belief in this ain't the game for you. Just stay clear of it. Stay on the fucking sideline. Put it in the S&P 500. Put it in some sort of investment that will generate you return, so you're not losing money keeping your shit in the bank.
Except even that's not guaranteed, because if I would have invested in the S&P
long-term S&P 500 is
exactly, if you would get your 8% return a year. Exactly.
Yeah. See that's just the thing. And I've talked to you about this privately. Like, at this point, because
like you always come like, should I do Apple or this? I'm like,
no. Right. We'll get like your level of financial literacy at this point, because you've played the game. You've taken the hardest losses, but learned the most valuable lessons. Like
my father always says, you don't know how to make money until you lose big money.
At this stage, like a 10% gain for you, because you have an awareness of actually what is possible, that's like a 40% loss. But with most people, again, like you have to build that confidence. You have to build that understanding, and you can't just hear something like this and then go and have that. Like, you gotta take that L. Everybody does. I took one in 2018. I tried to get in, just like this is what everybody tries to do during the shit, when the shit's good and it's going up and everybody's making money, and you hear about it, your boys are making money. A group of friends made 7 figures. You want to get in on that action, and and got in. Did I ever? I not only did I get myself in, I turned Jinder onto it. Him and I, we bought into XRP when it was
at the peak. You bought it literally almost at the peak.
It was, but as it went down, I bought more and bought more. Thank God that saved my ass. I bought in as much as, I believe, 2.25 and as low as $1, right?
Yes.
Now,
what's amazing is the fact that you held on.
How low did it go?
10 cents.
It went to 10 cents. So
guys, at some point you call me, you're like, I know it's already gone. I'm not even looking at it because it's gone. It's zero. So you call me like, I think it's probably worth a couple of grand now.
Yeah. So like, I'll just put it out there. Cumulative, back then I put in 350 grand. Okay. And it went down. It started going down, and I kept kicking in more, which lowered my dollar cost average.
Huge. That was huge for you.
Thank God I did that. But it got so low, it was getting down to the 70s and 60s.
I wish you would have bought some at 10 cents.
At that point, dude, but at that point, that was my first investment. And in my mind, I was like, this was not the right decision. But you know what? I was so busy, had other things going on at the time. Thankfully, like it didn't consume me, and I wasn't too stressed about it, because I just deleted the motherfucking app from my phone, and I was like, out of sight, out of mind. I wouldn't look at the news. Crypto wasn't as mainstream it is now, so it wasn't thrown in my face all the time. Every once in a while, I would hear it was going lower and lower, and it was at 1/4. And in my mind, I'm like trying to do some math to figure out where I'm at. And again, off that initial 350K investment, at one point I'd calculated, I was at like 17 grand. I was like, I basically have lost this. And Saman, to your credit, you tried to tell me multiple times that, like, look, you should cut your losses, you should sell, and you could reallocate it into Bitcoin. And I was like, you know what, this. I was like, at the beginning of this, we made a commitment, and I'm either going to 10 or I'm going to 0.
Well, what I loved about it is that which I said is that the point of maximum fear is when things turn around.
Mm-hmm.
And so, mind you, you bought at $2, $1.75, $15. It goes all the way to 10 cents. And at 10 cents, when most people would have tapped out, you did not, it goes back all the way up to $1.85.
Yeah. I'm back in the green now.
And you in the green.
Yeah.
So that is the perfect.
After 3 years.
After 3 years. But that is the perfect example of if you would have tapped out early.
Oh my God.
If you would have tapped out
I would have lost it all.
You would have lost it all. Because guess what? Your number of XRP never went down.
No.
Not by one.
No. And we know where it's going. As soon as they settle this lawsuit, it's going to double minimum. So that's the whole thing. The psychology aspect is so important. You have to be willing to put this money away. This is an investment. An investment means you're putting money away in a commodity.
For the future.
For the
future doesn't mean
This is an
tomorrow or
exactly.
next month.
This is not your, this is for your future. This is, you're putting this money into this commodity that is going to accumulate.
Think of it like an IR. Think about it this way. If you treated it like your typical 401k at your work where you can't touch until you're 59 and a half, treat it like that.
That's what it's meant to be.
If you truly,
yeah.
Listen, imagine if whatever you bought was locked away and you couldn't touch it. Do you know how ridiculously rich you'd be if you couldn't touch it for the next 20 some years? Mm-hmm. Where would Bitcoin or Ethereum be in 20 years?
Yeah, we're going to
Not
get there
5 years or 10. And we'll talk about this.
Yeah,
we'll be like,
there.
we had this conversation in 2021 and let's look back and see where we thought things would be.
I honestly want to set up a benefit for my employees with Bitcoin as, like, instead of the traditional
city of
401k,
Miami has already, it's happening. City of Miami has already said that any of their employees that want to get paid in Bitcoin, they can. Mm-hmm. There are NFL players that are saying, I want my salary in Bitcoin because the US dollar is losing money every single day. This is so the last thing, as we're wrapping this up, the last thing that I want to say is that as this has evolved, what has happened is like 2013, 2017 was a lot of you and I.
Yep.
There was not a lot of institutions and the big money. And as I said, because there was, when it was $100 billion, $200 billion for a large institution like a Goldman
still
Sachs,
chump change.
Morgan, it's chump change to them. That's like lunch money.
Yeah.
For now, the moment you have a T in front of your asset, 1 trillion and above, now you're talking about changes. It's a game changer. Yeah. Now, to give the audience a little bit, the gold market is a $10 trillion market. Now, mind you, gold is extremely difficult.
It's been around for how long, though?
What is it?
How long has it been around? Exactly.
Forever.
Yeah.
Now, the biggest thing is you can't transport gold easily. If I wanted to transport $1 billion worth of gold, we would have to get a 747, a couple of them.
You told me years ago when we were first talking investing, years and years and years ago, and you're helping me understand the value of gold, worst case scenario.
Yeah.
You said if shit hits the fan and this whole place turns into a war zone, what are you going to do? Like, go around with gold in your backpack?
Because I'm going to come with my AR-15 and take your gold.
Yes.
I said, buy bullets, buy ammo and guns. It's
people don't think like that, though. They don't think that worst case scenario. And if you do think about
you can't eat it. Because people are like, this is the other, like people are like, well, I'm like, if you're hungry, you're going to starve with your gold. If you had a chest full of gold bars and you were on an island or a desert, you're going to die. Right? You can't eat it. You can't wear it. It is literally just something else. And mind you, gold, believe it or not, is not as scarce as we think it is. It is a perceived scarceness. Mm-hmm. We can go and mine for more gold. We can always get more gold. Yeah. There's literally Elon Musk is like, there are meteors giant size of Texas that are full of gold that he wants to go mine in the space and bring back, right? So we can go, if tomorrow like right now, let's say gold is $1,800 an ounce. If we woke up tomorrow and gold was $1 million an ounce, I'll be taking off we'd be melting tooth fillings.
Right.
We find, silverware, any jewelry, because we're like, you can't mine more Bitcoin there was 21 million Bitcoins ever for the history of eternity.
Yep.
You can't double it. You can't add it. You can't be like, hey, let's just do 1 more million. It's not like the US dollars.
No.
Like, hey, let's
Let's
add
put
some.
out, yeah.
So it is the perfect, when you look at it, it is the perfect scarce asset. And when I say there are 40 million plus millionaires in the world and there's only 19 million coins right now. So there's not even enough Bitcoin for every millionaire in the world to get one of them in there. There are legit long-term macro analysts that say Bitcoin in the next 20, 30 years will be like feudal times where it was land. Like you were either like the lord or a peasant, and that determined whether you owned land or not. Like the people that owned land were royalty, and the people that did not basically had to work for everything else. And like everything will essentially be valued in Bitcoin, because right now, a farmer in South America or Africa that has their goods to sell, they don't have banks. They don't have a way to exchange money. Digital currency, how it's going to make it happen. That's how all this is going to make the world smaller, where transactions can happen between people without any trust. And that's what I said. That trustless technology that's built in there, that you send that money, I receive it, I consider it received. It's not a check. It's not a credit card that you can dispute. I can send you, you can ring my credit card for $50,000. I can call my bank tomorrow and dispute the hell out of it, and I'll probably get my money back.
In a world before cell phones, was like the late 90s, right? They came out with cell phones?
Yes.
Okay. So
I had one of the battery pack ones.
yeah. So do you remember before cell phones when you had to like call somebody, you picked up your phone with the cord oftentimes, right? And then maybe the
Rotary.
Right, the rotary phone, and you called them, and maybe they were home to answer it, maybe they weren't, right? So then they come out with cell phones. Now we barely even talk, and like evolution is, we
never think it's going to come as fast.
Yes.
Right. Listen, in medical school, and again, I graduated medical school in 2000. It's not like it was in the 60s, right? When we were hearing like, oh yeah, you're gonna have cell phones that you can see each other in and talk. I'm like, that is some Star Trek shit.
Yeah.
Like, no.
Yeah. So all it is an example of making something more efficient. The same way we've done with television sets. Back in the day, I remember having a TV, and look, I'm 38 years old at the time that this is being recorded, okay? I'm not some 70-year-old man who's talking to some kids, hey, back in my day, Sonny. Like I remember televisions that were like this screen that was kind of like a dome and the antennas on the top. You'd have to adjust antennas to make the picture display properly. Like this has happened in my lifetime. Now, what technology has done is it's made the world more efficient, more effective, and able to operate at a higher level. That's the same thing that's happening right now with currency. So guys, listen, if hopefully you got some value from this, hopefully this has made you a little more confident and giving you a little more motivation and incentive to start researching this and looking into this. Because if people would just simply look at the historics, and look, we're for the sake of this interview and for the sake of a beginner, the only thing that I want to advise people look into are the big two. Do
some more research.
Bitcoin and Ethereum, right?
Yes,
we back winners. That's it. We back winners. Like if you're just getting into this, you have no business concerning yourself with the latest
don't
internet.
Call me about Shiba coin and
because some
Doge
fucking idiot, it's just like anything. Everybody gambles once in a while and gets lucky. But what you don't hear about is the 1,000 people who lost everything. You don't hear about that motherfucking shit because people aren't posting that on the internet. Do the research. And when I say the research, right, you can either do what this guy does and watch insanely complex, highly complicated YouTube videos that, most of you guys probably wouldn't even understand because I have a hard time understanding it. Or you could just look at the track record year over year and look at the trends. Look at what Bitcoin has done. Look at what Ethereum has done.
200% return.
There hasn't been a year, every year.
For 10 years.
And that's all you have to do. You pull back, you look long-term, you think long-term. And with that new perspective and hopefully that newfound confidence, you chill the fuck out. You don't be a bitch. and you got those diamond hands, baby.
You gotta have the diamond hands.
You gotta have the diamond
And
hands.
like I said, remember, like when you were I was calling you, I'm like, I am sitting there rooting, looking at the screen like lower.
Listen,
lower.
This week, look, people are able, like we're doing the video, so they'll see this on YouTube. They're seeing your state. They're seeing your vibe. It's pretty good. Like I've been with you most of the evening. Like you're in a good mood. You have in fact lost technically multiple 7 figures this week.
Listen,
Excuse me, the last 48 hours.
I literally, like, it was like a joke. Like I woke up, I'm like, wow. It was like a 2 million drop.
Yeah.
I'm not joking. Like literally.
From when you went to bed.
From when I went to bed and
Yeah.
wake up, like the account was down by $2 million. And I smiled. I'm like,
And
we're going to have to buy some more.
You went and brushed your teeth and had breakfast with your family.
I did not panic.
No.
I didn't cry.
No.
Because it's paper money
But
anyways.
exactly. And hold on. For the people who out there who say, oh, well, he has a ton of money. He can afford to lose it.
No.
Nobody can afford to. Dude, nobody likes to lose money. Nobody can afford to lose money technically. But this isn't a gamble. Like this is not a gamble. This is chess.
It's
not
conviction.
fucking checkers. In fact, perhaps when you saw that, maybe before you went and had breakfast with your family, you actually bought some more.
Yeah, I did.
You
I did.
So look, guys, do the research, and don't overwhelm yourself. Don't do the mainstream research. You do the mainstream research because the mainstream media is going to say the worst shit. They're going to make you think this is the fucking devil. They're going to make you think it's some pyramid scam, backwards bullshit. But those of you guys who listen to my shit, you know what my take is on the mainstream media. The mainstream media is set out to basically keep you in fear, keep you fat, keep you sick, keep you unhealthy. And to keep you dependent on handouts and this agenda.
This entire idea again was born from the show that the government caused the economic crash.
Yeah.
So it was essentially brought on
by patriots.
As a solution, as patriots, to say, I don't need a tertiary party to tell me how to manage my money. Think about it. You go and give the bank your money. Think about how crazy this idea is. I would listen, Cav, you have $100,000, keep up with the Bank of Saman Soleymani. I'm not going to give you shit for holding $100,000 or $1 million of your money. And every time you call me, he's like, Saman, can I have 10 grand? Like, it's going to cost you $5.95.
And I'll get it to you in 3 days.
Think about how asinine that thought process is. And we're fully on board with that. And we're like, we get great customer service.
Nobody thinks
There's
about this.
There's coffee when I walk into the lobby.
Nobody thinks about that.
Right?
Yeah.
So you get charged for everything. This was designed as a way, like, I don't need anyone to control or tell me how I can or when. Listen, if I want to send money at 3 a.m., I can.
Yep.
I'm not dependent on a bank, not a weekend, not weekend hours. And guess what? At any single time, a bank can turn off your account because they did not like something about you. And there are people that got their bank accounts closed because they invested in cryptocurrency. Because they had a ACH withdrawn to like a Coinbase or a Gemini or somewhere else. And the banks were like, oh, you invested we close your Bank of America account. That is they have your money. They give you no interest for your money.
And they question how you spend
then they
it.
charge you for holding your money.
Do you remember back when I first started investing that in cryptocurrency and XRP? I can't remember the circumstances, but the bank wouldn't actually let me transfer my money to
Coinbase.
Right, at the time.
Yeah.
Because they said it wasn't authorized. I'm like, well, what do you mean? How are you going to tell me
It's
that?
my money.
It's my money.
If I want to just burn it in your parking lot.
If I want to literally have you print it out and hand it to me and then rip it up in front of your face or put it through I should have the right to do that. They basically wouldn't allow me to send it right to Coinbase. So the workaround was what was the workaround back then? All I remember is it was a hell of a process.
It was crazy.
Yeah, it made it
for some of my friends. I had to buy for them.
Oh, you bought for me?
I bought for you, and then you wired me the money.
That's right.
Yes,
that's right. I forgot about that, dude. That's so fucked up.
That you don't have a say so of your own money.
The other day, I finally took your advice on board. I didn't liquidate my Fidelity. I halfway liquidated my Fidelity, and goddamn, had I done that back the first 3 times you told me, my net worth would be quintupled by now. But we don't look at it like that. We don't look.
We look at
it's
the future.
Gonna happen. Yeah, it's gonna happen anyway. But when I went to cash out some of my stocks, it then took
3 days.
3 days
Remember
for
when
the money. Yes.
The funny thing is, like, you were completely oblivious to it.
Yeah,
Because
it's
you're like, I'm
ridiculous.
going to send the money tomorrow. I'm like, you understand you're not going to get your money until next week. Like, what are you talking about?
So I sold the stock. 3 days later, the money appears in my Fidelity account. And then I have to transfer it from Fidelity to my bank, which takes another, depending on, when they feel like doing the work, another day or two. Like, we're talking 5-6 days
During
at
that time,
point.
it's rising.
And that's the thing. The market and how volatile it is, it's going up, it's going down. I need my money when I need my money so I can do what I want with my money, because by the time I got around to doing what I did, I'd lost a lot of buying opportunity and momentum. But
actually, this happened to me in December when I liquidated my position. I never really liquidated position in a money where I was in a hurry, right? So I remember it was a Thursday. I sold. Now, mind you, what's crazy about it is that, let's say I bought the Apple stock from Fidelity, right? Like, it's not like I bought it and they had to verify whether it's a real Apple stock or not. It's been there, it's been their account. We sell it. It shows it's been sold. It shows what the price it is, what the account value is. And so I call them like, okay, we sold all this thing. Can I have this wire to my account? No, we can't. Why? Well, it needs to settle for 2 business days. Like, what do you mean? Like, your Fidelity, you sold it. You agree, like, it's in your account that says this is what you sold it for. And it's stocks that you are holding.
Right.
So it's not like I try to bring some fake Apple stocks that
like,
you have to verify.
what are you verifying?
What is there to verify?
Yeah.
We have to wait for the account. So from that Thursday until Monday, and mind you, digital currency never sleeps. It's 24 hours a day. The prices of Ethereum and Bitcoin went up by like 10-15% on those 3-4 days while I had to wait for my money to invest it.
Yeah.
And that was like I understood the concept of decentralized finance even more then. During that pain, while I have all this money of my money that somebody else is holding, and I have absolutely zero say-so in what's happening to it. Fidelity, for all practical purposes, Fidelity could have said, like, hey, listen, we have some security issues. We're doing something. We're going to have to wait for 2 weeks. And there was nothing I could have done.
The banks, Fidelity, the fact is, the more money they hold, the more money they make off our money. So when people want to liquidate or take out a substantial amount of their monies that are in the bank or the Fidelity account, basically they have those policies in place so they could squeeze just a little bit more out of you.
Think about times millions of customers.
Dude, that's billions and billions, arguably trillions of dollars a year. So I get it. I'm just not pumped about it. And the fact is, the blockchain, the cryptocurrency, this gives you the ability to be actually in control of your money and to have the ability to have access to your money when you need it, not on anybody's timeline.
Absolutely.
Yeah.
I mean, like I said, as of now, there are examples I was watching 2 weeks ago where, a farmer that needs a fertilizer from this country that he normally cannot get, instead of having to get approval from anybody, he can just send his funds to the distributor or the seller right here in the United States or somewhere else and get his goods and not have to worry about a bank approval, a bank transfer. It is opening. It's literally Internet 2.0. It's as how crazy as the thought was. I'm telling. I'm getting to that age where the younger folks.
Right.
I was talking to Tony's kids. I'm like, you realize, like, again, not last century, like when I was in college and we had to go research something, I had to go to the library, I had to pull out the little drawer, find the card, and then go find the aisle, and that book that I was looking for was either there or not there, and then got to go look through the index, find what I was looking for, and hopefully learn something. That in 15 years, in 20 years, it has changed the world upside down, where I have patients walking in with their own diagnosis in their hands. And I have to try to prove to them that, no, you do not have cancer.
Right.
So 20 years ago, it would have been unfathomable. But it's happening now. And in 20 years, things will be on a different level of what we're thinking. See, there are things that you and I can't even fathom right now.
That's why people got to get on board. They have to be open to change. We talk about the growth mindset. We talk about being open-minded. This is happening whether people like it or not.
No, it's happening.
It's
happened already for 10 years.
Exactly.
Anyone that has been on it, anyone that may have even peaked, All you got to do is just look at peak times. What was the price in 2010, 12, 14, 16, 18, 20, 21? You take any of those 2 year time periods, yes, did it have ups and downs along the way? But the bottom line is it started from a penny.
Yeah.
Like it started from the bottom.
Yeah.
And it hit 65,000.
Yeah, the trend is
sure,
up.
we're 40, but guess what? We expect those.
But are we really 40, or is this just that again? Is this just that period where the weak ones get flushed out,
yes.
and the people who are like us and the whales who basically control this thing are buying more because that's just the way the game is played. The fact is, the difference in people is not how much money they have and how much money that they're investing. It's what they have up here in this thing. And if you can learn to be resilient and be disciplined and understand that this is a long-term commitment, dude, like you're going to win. And I honestly hope that the people who listen to this, I hope that some of them.
Yeah, I would love for anyone to, like I said, take anything, like I said, don't take your kids' money. Don't take your money that you need tomorrow, next month, your rent money, mortgage money. But the money that you were going to go drinking with, the money that you were going to go blow on some dumb purse, dumb shoe that you can't really afford anyway. You have no, listen, I know plenty of people that can't pay the rent, but somehow need to go buy a $2,000 Louis Vuitton purse because they want to look cool. Take that $2,000 and go buy yourself some Bitcoin or Ethereum. I promise you in 3 years, you can buy 5 Louis Vuitton purses with that and then some.
Yeah.
So
we want to hear those testimonies. We want to hear those of you who heard this, who just, it struck a chord, you took action, and you won. Because from somebody who took a bad beat and literally it wasn't until, I believe it was the middle of February where I got back in the game. Okay, February 2021, that's a few months ago. Okay, that's when I started investing in cryptocurrency. So I haven't been investing and winning the way you have for as long as you have. I had a very negative association based off of the huge loss that at the time I took, but I had the balls to get back in. And not only did I end up making a shitload of money off my new investments, in that process, somewhere along the way, that initial investment, that bad beat where I lost my ass, I'm back in top.
And listen,
I'm back in the green.
Everyone needs that everyone needs that psychology of that negative experience to go through it.
So valuable.
So that second time when it comes around, you know that pain.
Yes.
And you don't make that same mistake.
It doesn't sting as bad.
It doesn't sting as bad. And now your mindset is different. Trust me, 4 years ago, my mindset was different.
Yeah.
When every time the market moved down 20%, oh my God.
Yeah.
Now it is, I welcome it. Because I'm like, I don't want it to go up $2,000 every day because that's how things get risky. When that graph is going vertically up, it can also come vertically down. I want it to be as like easy does it. I'll be okay if it goes up $1,000, a week, a month for the next 20 years versus going up 50,000 in a week and then crash and come down. So it's one of those things that as long as you have a longer outlook and you're not wanting to try to cash out or, make a quick buck in a week or two, it is I do not think there is a better investment tool.
Yeah.
And like I said, who am I? Some of the smartest people that I would consider are, have more resources, billions and trillions of dollars. So Goldman Sachs just announced last week, they have hired 1,000 of their analysts for their Bitcoin trading.
Why is that important?
Just think about Goldman Sachs, which is like the 800-pound gorilla in the investment banking world. For them to go hire 1 or 100 or 500 or this number, and what are those people doing? Those people are there to sell and push Bitcoin to their high net worth clients. And why is that happening? Because for the first time ever, some of the largest investment banks are now, you know how typically if you ever met with any financial advisor, they would say, invest 60% in stocks,
right.
this much in bonds, this money percentage in
traditional
precious
formula.
metals, right?
Yeah.
Now, guess what? They're like, invest 5%. And mind you, someone that's got $100 million and you tell them invest 5% in Bitcoin, that's $5 million.
Yeah.
So now these investment bankers are telling their clients, you should invest 5% in cryptocurrency. And these are what they call not their high net worth, ultra high net worth clients. And telling them you should put 5% in Bitcoin. They bring this solution because their clients are demanding it. Their clients are like, why do I need to go to Coinbase or XYZ to buy?
Yeah.
I'm investing $100 million with Goldman Sachs.
Yeah, make it happen.
And guess what? Goldman Sachs is like, I got to listen to what my investors want. So when that tidal wave is coming, if you don't ride that wave, like if that bull is, ride that bull.
Yeah.
Ride it.
Yeah. And look, guys, if you want to win, you have to watch and learn from people who are. And this guy's winning. He's winning across the board. He's also helped a lot of people win. The fact is, like, if you're hearing this and it's not quite making sense to you, like, it's okay. It didn't make sense to me for a long time. For a long time, it didn't make sense to you. But
everyone goes through that phase.
Right. But you have the responsibility to educate yourself, to get informed, to do the research, to look at the trends. And
there's a great documentary on Netflix now called Money.
Yeah.
And it shows you.
It breaks it down.
It breaks down money. It talks about, and this is, mind you, this is not a Bitcoin pumping piece. It's a great documentary, but it talks about how literally idiotic money is, how it is literally nothing.
Right.
It stands on nothing.
Perception.
It's a perception and how it's created, how, money is created by debt. People do not understand. The only reason we have money is because there is debt.
Yep.
So when you go and take a $10,000 car loan from your bank, the moment you sign that debt receipt that I owe this credit union 10 grand, that credit union turns that into Federal Reserve, and suddenly $10,000 appears in their bank account.
Yep.
Like, they didn't take your money and give it to me to go buy a car.
Right.
That's what's called a fractional reserve banking system. It is created out of thin air. And in a fractional reserve, you can lend 9 times of what your deposits are. So if I go open Bank of Saman and you're my first depositor and you come give me $10,000, now I can lend 90,000 out.
Yeah,
right?
That's a whole other.
That's
a whole other conversation.
But what I'm saying is that it's a very good, that money documentary on Netflix is a great just starter for anyone that just wants to know how money works, and that gives you. And they also talk about digital currency and Bitcoin, and it kind of towards the end of that they go into that and why that's come up. So that's a great way to just kind of at least refresh and get started.
Agreed. And I've recently actually posted on my Instagram like 9 books that'll actually help you change your psychology toward money. People are probably more likely to go watch the Netflix documentary than pick up those books. Hey, I suggest you do both, but either way, Saman, thank you, brother.
Of course.
Thank you for this. Thank you for sharing your knowledge and wisdom and time with me, with our listeners. And guys, pay it forward by taking this man's advice on board and going and making these moves and staying disciplined and staying consistent and staying committed so you can live the life that you truly deserve and set your kids and arguably your kids' kids up for generational wealth. Because the fact is, the only way that you're going to make wealth, let alone generation wealth, is through investing.
Awesome.
That said,
thank you so much.
Thank you, brother. Crush it this week, guys. Thank you for tuning in. Hey, feel free to leave us a review. We just dropped some solid info. We should be charging for this. You know what? Maybe we will. Maybe we should. I need to rethink this. We'll listen to this back and see. Maybe we should actually tease like a little 5-minute clip, sell this, make some money that we will then reallocate towards more crypto.
We'll give it back to the community.
All right, guys. Much love. Thank you for watching. Thank you for listening.
Thank you.
And we'll talk to you soon.